Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, January 11th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. Big picture. We'll work our way into the day itself. We came several weeks ago off this long-term resistance area, targeted long-term resistance. That is this week at 257.72. We slipped through it that week that we tested. We even closed above it on a daily basis. The daily chart version of that, which is presently at 255.54 and dropping. You can see we spent a day, the following day, key reversal high, fell away, underscoring the importance of the weekly settlement in relation to a longer-term trend identification. And so here we are, your mid to upper 250s, your longer-term price ceiling. We've tested it, and below it, you cannot discount the possibility for the market to rotate south over the coming months, 2 to 3, 3 to 5 months into the upper 170s, this 179.22 descending channel bottom in reach over the next 2 to 3, 3 to 5 months. You can prepare for that. You can trade that. If you're an options trader, you could reach for 180 or 175 strike out of the money puts that don't expire for at least 6 months. And I've been saying that now for a number of weeks. Now, in terms of clarifying whether we truly expect 179.22 in short order, and that would be a settlement below the 223.14 to 224.40 region, which is an area that we have been anticipating now as a 3 to 5 day objective following the settlement earlier this week below 239.96. And we've also expected it as a 3 to 5 week downside target following the testing of that long-term resistance I mentioned a moment ago in the mid to upper 250s. And so having closed this week, Tuesday below 239.96, we maintain a 3 to 5 day sell signal into the 223.14 to 24.40 region. On the way down, we do have 229.60, a 50% downside retracement off that October low against the more recent high. It can contain intraday selling pressures. If we break 229.60 today, we could actually, by the closing bell, test the 223.14 to 224.40 region, where we could bottom out through next week. Once tested, round back up within 3 to 5 days to 239.96, and quite possibly over the following 2 to 3 weeks back into the mid to upper 250s, where the market encounters long-term resistance, able to contain buying on a monthly, possibly quarterly basis. And that is really the way I see it as we move through the rest of January. We could bottom out in the 223.14 to 24.40 region. So if you've been short the market since testing long-term resistance a couple of weeks ago in the mid to upper 250s, then it was low 260s. Or if you're short the market now from a couple of days ago when we settled below 239.96, the 223.14 to 24.40 region is your profit-taking area. And you could consider reversing and going long here. 3 to 5 day swing traders could reverse and go long to 239.96. 2 to 3 week swing traders could reverse and go long back into the mid 250s, where profits can be taken, and another short set as we move into later February. Now, if we did close today below 223.14, and I'm not expecting that today, but we could over the next few days, that does indeed set up a sell signal as we move into February. The following, I think still 3 to 5 weeks is possible to the 179.26 channel bottom. That is longer term support that I mentioned at the top of the video, that holding below 257.72, the market is in reach of 179.22. And so just to clarify, it would be a settlement today today below 223.14. That should yield the 179.26 channel bottom by the end of February, where we could actually, by that point in time, bottom out through all of the second quarter. And so I will finish this thought with, if we do close below 223.14, you're comfortable playing both sides of the market, you're comfortable with options, you may then consider, if you haven't already, reaching for 175 or 180 strike out of the money puts that don't expire for at least 3 months. You may go further out, you'll pay a little bit more, but your time to decay element will be reduced significantly. Let's talk upside today. 239.96 is your day trade short sale. It is also the short sale as we move into next week, because below which 223.14 to 24.40 remains a 3 to 5 day target. But if we do close above 239.96, not only a good low for the week, which isn't saying much because it is Thursday after all, but I think a good low through next week. I do think then 252.14 should be considered a 3 to 5 day target. That is a Fibonacci up here. There are other things going on. In fact, yes, it is a former rising 1/3 speed line. And I do think the 5/8 upside Fibonacci over the last couple of weeks is in that same neighborhood. Just to sort of, summarize it though, if we did close above 239.96 today, I think that's a good low through next week. And we can, over the following 3 to 5 days, by the end of next week, retest that 255.54 to 257.72 area. 257.72 is sort of the backstop as we move into the second quarter, able to contain buying pressures over that time frame, below which the 170s in reach over the next 3 to 5 months. And inversely, it's not going to happen this week, but it's certainly possible that over the next several weeks we happen to close above the 257.72 channel top. That does need to be by a 1% margin to eliminate the sort of sloppy, how would I put that? The possibility for buy signal failure is drastically reduced if you can also close above the 1% threshold, which this week is 260.29. And so if we close above both of these points, then we have a significant buy signal as we move into the second quarter. I'll say by mid-year, we should then reach up to this 352.93 longer-term channel top. But we're a long way from that right now. I am going to leave you with this image, the most appropriate one for the day itself. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. I'll be back tomorrow, of course, with Friday's Tesla, and you have a great day.